It's the 6th of the 1st. I'm Arthur Falls, and this is Beyond Bitcoin. In the second half of 2014, we saw the emergence of a new breed of crypto token with a value somewhat independent of the demand for the token itself. Some of these track the value of the US dollar, or even gold, and are designed as a means to effectively transport value through time and space. But not in the classic Mises money substitute sense, like a note representing ownership of an underlying asset. Instead, they do it through extremely clever market wizardry. All the benefits of a cryptocurrency with the stability of fiat. One of these tokens is the Nubit, and today Ben Rossi joins to explain how the platform works. Before we get into that though, I'd like to announce with a pang of nostalgia that this will be the second to last episode of Beyond Bitcoin. It's been a great ride, and I hate to put a final word on anything, but at least for the time being, I'd like to work on some other projects. This has been my first effort at content creation, and with the support of the many characters I've met along the way, it's been an absolute blast. I'd like to take this moment to thank several people who have been especially helpful. First and foremost, the mildly psychotic BitShares community member, Fuzznuts, who was extremely supportive in the beginning. This would never have got off the ground without you. Adam Levine, who through Let's Talk Bitcoin introduced me to this entirely new world and went on to give me a platform to share this passion with others who are also interested, and not just my board mates. Also Nikolai Mashigian, the first person I ever interviewed, who introduced me to Michael Dean, the Freedom Fiend, thanks to you too. And you, the listeners. It's your support and participation that has made this such a rewarding adventure. 2014 was huge, and 2015 will be much bigger. We have OpenBazaar bringing a parallel crypto economy to the entire globe, BitSquare allowing easy entrance of capital through a decentralized service, Ripple is remitting, Counterparty's partying, Ethereum, well, they're doing pretty much everything. There is so much going on, it's hard to know where to focus. Personally, I'm taking a step back from the Apollonian and intend to look at some of the philosophical underpinnings of this movement, the social, cultural and intellectual environment in which it's germinating, and where we can expect it to go in the future. So please, if you have any reading suggestions, get in touch. There is a huge list of subjects and projects I wanted to explore and people I wanted to speak to. It's impossible to do everything though, so for the last episode I intend to track down just a couple of guys I met at Bitcoin South who were profoundly interesting, and also look at an amazing white paper, An Architecture for the Internet of Money. As of this moment, little of the next episode has actually been recorded, so it might take a little organising, but we want to go out with something pretty decent. As already said, today it's Nubits, which if you flick over to a Brave New Coin or CoinMarketCap right now, you'll see trading within a hair of the price of the US dollar.
I've got you in an elevator right now, so the 30-second elevator pitch would be, we love cryptocurrency. We love what the teams for Bitcoin, for all of the innovations that have come after it, things proof of stake, anonymity. There are these great technologies, not just from a monetary sense, but I see blockchain technology as being a fundamental underpinning of where technology goes in the future. Being able to split things up, distribute them across, both for safety and just to be able to protect both the participants and the network itself, is going to be very important. What Jordan Lee, the creator of New, it's not that he came up with it necessarily, but he was the first to try to, push through an implementation. Bytemaster being the other one, and I'm sure that there were others before this, but that had not come to total fruition. And now I'm going on a minute versus 30 seconds. But the main, the idea that we're trying to build on is, we love the ability to be speculative on cryptocurrency, but to be speculative means that it makes it very, very difficult to use as a transactional currency. You identified that earlier on. If things are stable, which is a great transactional currency, it makes it very difficult to make money and to speculate on it. Something that right now is very important to the communities. So the idea of being able to split it into two fungible units that could be independently valued, but would work, in concert with one another, really is what attracted me to the project once I was informed about what we were doing. Because I had originally come on to join the PeerShares team, which is what kind of was the starting point for where New came from. And when Jordan introduced this concept to us, it took me a little while to really get my mind around it. But once I did, I realized it was going to be a game changer one way or another.
I guess I didn't actually ask you to introduce yourself. So,
absolutely.
So would you introduce yourself and then also explain how you got involved with PeerShares in the first place?
Sure. My name is Ben Rossi. I live in the United States, and I got into cryptocurrency probably like a lot of people did during the 2013 period when Bitcoin was doing all sorts of really interesting things and the media started to pick up on it. I'd originally actually come across it back in about 2010, and at the time I didn't feel that I was technical enough to really dig into getting mining working and everything like that. But like a lot of you, I picked up the coolest hardware at the time, which was a Butterfly Labs miner. I then waited a long time for it to be delivered, and by the time it actually arrived, the difficulty of Bitcoin had jumped up quite a bit more than what my miners were going to be able to handle. So I started to look for alternatives, came across Peercoin, and started to mine Peercoin, buy Bitcoin on the side because it made more sense at that point than buying new mining hardware. And over time, got involved in that community. Jordan Lee, the inventor, the major proponent of New, and the developer of the concept, had been working on a product called NewShares, and the idea was to be able to set up a blockchain, a customized blockchain for businesses, for organizations, for individuals, that they could be able to offer their own equity and then be able to do a dividend distribution using a cryptocurrency different from the shares themselves. And so originally I just started doing quality assurance work with them, and in general helping to spread that message. And about 2-3 months later, I was introduced to New, and we had started building it in earnest in about February, March of this year. So that's the roundabout of how I got to where I am. As I tell my kids, the job I have today is not a job that I think I would have ever imagined myself doing, because it didn't exist at the time that I was thinking about that. So,
of course not. No. So what is the organization structure like at or behind the scenes of Nubits?
So the New team is all over the world. We've kind of assembled a group of people, both from the development side and from the community and marketing sides. Jordan Lee had actually never met, which still, my wife gets a chuckle out of it, that I do work with somebody that I've never actually been in the physical room with. So Jordan heads up the organization as the chief architect. Mike is our lead developer, who has done some amazing things with the code. We've got 2 or 3 quality assurance people. We've got a couple, both full-time and part-time marketing working on the side. And then we've got a really great community a lot of them have come from the Peercoin community, but then also a lot that have migrated in from either other cryptocurrencies or from the financial and economic sides. So, nobody is the one main point, but everyone together makes for a really good team.
And I know, I guess I want to talk more about the team a little bit later when we go into custodians, because I know you guys have a really interesting model for you allowing the shareholders to award funds to individuals to perform certain tasks in support of the network and the economy itself. So I'd like to talk more about that when we get into custodians. But before we get into that, I'd like to look at how the unit of exchange, the new bit, as opposed to the unit of stake, the new share, how the unit of exchange maintains its stable value so reliably, because it has been stable for quite a while, hasn't it?
Yes. Crossing fingers that I'm not going to turn over and look at CoinMarketCap right now and see something that I don't expect. But all things considered, it's done very well. For about 3 months now since we launched, we've been able to maintain that $1 mark, within about a cent either way, but usually right on that $1 average point. So, I mean, to talk a little bit about how it works, actually we'll touch a little bit on the custodian idea that you just brought up. So the way that we maintain it is artificial. Something that if we were to let it organically try to make the market, like anything, you're going to have speculation depending on supply, on demand at any given time. And so what New does is it uses this concept of a custodian, which is a community member, a business. Long term, we really have no idea who is going to attempt to be a custodian, but the idea is that the custodian has a job to do. And right now, the major custodians we have are market maker custodians. And so they set up both large and buy and sell walls and effectively lock the price in kind of within a very narrow margin. So far, it's worked very well. We're adding exchanges on a pretty frequent basis. We have automated trading bots that we have open sourced, and they're available for the custodians to use. They're available for other people to use as well. It's called NewBot. And what NewBot does is it takes a look at the exchange rates, takes a look at the information that the custodian has added as the options, and it moves the buy and sell walls to keep within that $1 exchange range. So if this is a NewBit USD market, it's pretty easy. We basically say, the sell wall is slightly higher than $1 to take account for any exchange commission fees, and then the buy wall is a little bit lower than $1, again to take into account any commission fees. And so if somebody buys NewBits, they buy them for $1, or they buy them from somebody not the custodian, in that little interstitial area between the two walls, but they're able to get it at that price point. And when they go to sell it, there's an available wall for them to sell back into if there's not actually people buying it at some price point a little slightly above it. And again, we've been able to maintain it both on our supported markets, which I believe that there's 6 or 7 of them now, CCEDK and Better being the two of our largest ones. And then there's a couple of smaller, what I'll call unsupported markets, but they've actually seems like they've been maintaining about the same level of pricing. It's probably a little bit of an arbitrage. Also probably a little bit of just market discovery has helped people say, well, we think that the price is worth this, so that's what we'll price it at.
You guys have pretty good volume. How much of that volume is coming from the custodians that are supplying liquidity, and how much of it is genuine use? How much? Because I presume right now people are using NewBits to hedge against other currencies like Bitcoin. They're using it as a stable hedge. I'm wondering how much of it is for that purpose, and how much of what we're seeing is trading volume initiated by the custodians for other purposes.
So as far as I know, in talking to the custodians, I do part of my job is kind of custodian outreach and helping to build the tools that they can use to help spread messages to the or to spread information, I guess, things like reporting to the community. In the early days, we had some issues with the bots buying and selling kind of their walls as volatility of a particular cryptocurrency was very high. We'd run into some wall collisions. The NewBot team has done a really great job over the last couple months to try to get rid of all of those edge cases. And so at this point, any of the volume that I've seen, the best of my knowledge, is actually organic, real volume. It's not the custodians buying and selling their own walls. It's people using it as a hedge, people using it as an internal kind of mechanism to trade money amongst them for themselves. There's a lot of different things that I've heard people are using it for. It's hard to really suss out the exact things that are going on because it is a pretty anonymous way that the trading happens. But from everything I've been able to tell, and it does correlate to areas or times of high volatility amongst other cryptos, that we see a lot larger volume going on a daily basis. But I believe that we're starting to get daily just organic trading back and forth going on as well.
It's kind of difficult to really proceed without digging into the custodian concept. So I suppose
Sure.
let's just go straight into custodians, and could you explain where they get their funding from, where those new bits that they hold come from, how they get, how they find themselves in that custodian role, how they're selected, and what other roles they can play in the network.
Absolutely. So one of the innovations, and I believe that there were some other coins in the past that had limited versions of this, but our protocol-based voting is one of the things that I think New has really pushed the envelope on. So there's a couple different forms of it, and specific to the custodians, that there's a mechanism for shareholders to vote on issuing a grant of new bits to a custodian. And the way that the voting works is when you mint a block, so New, for people who aren't aware, we used POW for the first 400 blocks, proof of work, to create the initial supply of new shares. After the 400th block, so block 401 going forward, it switched completely to proof of stake. It uses a variation on the Peercoin proof of stake, where we've extended it to try to get rid of as many of the perceived vulnerabilities, for things like nothing at stake and the network fragmentation and things. But what we've done is, by having, when you mint a block, you're allowed to cast a vote. You can cast a vote for a grant. You can cast multiple votes for multiple grants. In that same block, you can vote on what we call the parking rates, and we can talk a little bit about those a little later. And then you can also vote on these kind of community initiatives that we call motions. So the way that a custodian becomes a custodian is somebody will, right now we use our forums, discuss.newbits.com, but a prospective custodian will say, I intend to do something. It's going to be this to support the network. It's going to cost, it's going to require this number of new bits, and here's what I plan to do once I have them. If more than 50% of the people minting at that time, in addition to more than 50% of the coin age that's destroyed, or the share age that's destroyed, are vote for it in a 10,000 block period, the motion passes, the protocol automatically generates the new bits that were requested and deposits them into an address that was specified.
A vote is only valid if a majority of the blocks minted in that period votes are cast in those blocks, right?
Correct.
And so not only does it, for a vote to pass, does a majority of those blocks have to include a vote, but it also must achieve a majority within that majority of blocks, correct?
Correct, yes.
So those are the two. So there's actually two dynamics going on there. So people you can't have a completely passive shareholder population for voting to proceed, correct?
Absolutely. As part of the reason that the way that the distribution for new shares had gone was that a lot of people had complained about it being insular, and that it was well, you got invited to be a shareholder, or you requested to be, and then Jordan Lee and who he was working with to select this initial batch of shareholders would be able to buy into the shares. But a lot of that had to do with the fact that to protect the network up front, because this is a little different than just having, say, I own a bunch of Peercoin, I mint with them, I receive my proof of stake reward for the block, and I'm happy to just continue to do what I'm doing. There is an active participant. You need to be patient, because every block that's solved without a vote for something is effectively a disagree with the vote that's being what is being voted on. So we needed to make sure that not that it was sycophantic in any way, but we needed to make sure that the early days, at least until we could get the network protected and stable and everything like that, it had to do with people who were going to be active participants, who were going to be asking questions, who were going to be challenging the custodian grant requests and things. So it definitely is important, and it's part of the reason that we felt that new shares are, there's an added component that really, in our opinion, helps motivate people to actually mint, where in the past it is a little bit more passive. Your vote counts. I think there's no really better way to say it.
I looked at investing in new shares when it first came about, but the barrier to entry was far too high, and also I wasn't prepared to invest so much time, so much cognitive effort into what I saw was not just an investment, but actually a project as well. It's something that takes a very active involvement, not something that you can just buy whole, buy and pray, which is typically my style of investment.
Yeah, it is, and like the early days, I'll draw the allusion to the early days of the Bitcoin network, not insofar as the similarities between them, other than, there weren't a lot of tools that made it easy to use Bitcoin. I mean, I look at my own experience back in 2010, there was, I'm pretty sure, Bitcoin Talk and a few other things at that point, and that was about it. And so to get the information, you had to dig in, and it really was intimidating as an outsider. But as we looked at where new is going, we're trying to build the tools that make it easier to understand things like what motions are being voted on right now. Quick links to get to those motions. What's the outstanding liquidity pools look like, so that when somebody says, well, I need X amount of, a grant for this amount, somebody who's a prospective or a shareholder who's going to vote on this can look at effectively a report and say, well, I don't think that that's really needed, because it looks like we're pretty well covered across all of the exchanges we're looking at. So the tools still need to be developed, and I definitely understand where you're coming from. I mean, I work on the team, and I try to it's an effort to keep up with everything that the community is putting forward, and what votes are going on. But we really hope over the next months and years to continue to build services and to watch an ecosystem of people who want to offer services, things like data feeds, to help a shareholder, maybe not vote a particular way, but at least understand what their votes mean, and things like parking rates to understand, what's a good yield curve, and how best to vote for it. So we have a lot of work to do, no doubt about that. But I think that the important part was building the bones that allow us to extend it.
And the client looks amazing as well. The client looks amazing, feels great to use, really simple. It makes total sense. You can actually understand a lot about PeerShares just from opening up the client or PeerShares. I know I've been poring over all this stuff.
No problem.
A lot about Nubits and new shares. Just by looking at the client, it makes sense. It's so simple. Although, to be fair, my first order of business was to send my newly purchased new shares to my Nubits account, to my Nubits address, which was obviously a bit of a headache to tidy up. But those are the growing pains. We were talking about voting. There are three kinds of voting available in the client: custodian vote, park rate vote, and the motion vote. Now we've touched on the custodian vote. I guess the one other thing I wanted to talk about with a custodian vote is what other roles, other than providing liquidity, do you envision custodians playing?
I think to use the old cliche, the sky's the limit, is particularly apt here because, like a lot of the technology that's come out around the blockchain, if you'd asked somebody 2 years ago, well, is somebody going to be able to build a distributed storage system like storage, on the blockchain and actually put it into practice? You'd get people going, well, yeah, I mean, it's theoretically possible, but nobody had really taken the effort to really do it. So the way that I look at what custodians can do is today they're really focused on providing liquidity and providing stability, but we have custodians right now who are handling things like building an official Android, Nubits Android wallet. And so there was a custodian who put in a small request for, it was about 3,600 or 3,800 Nubits to finance this, and they will be then financing it, managing the project, working with the developer, and ultimately releasing it to the community. So their role is completely different from somebody like Kiara Tom, who is handling who put out the initial liquidity custodian grant that really kind of spun up the network, where she's handling the exchange, Nubot, everything like that. So I see both the control of Nubits in terms of supporting the network. I see it in supporting the larger system. I could see eventually somebody coming up and saying, hey, I want to do I need some Nubits to do support for, say, vendor outreach, or being able to start a remittance business. I mean, there's all sorts of things. Maybe I want to be able to bank. Who knows? And I use bank in the air quotes term because I don't want to give people the wrong idea about where things can go. But in a distributed consensus-based network like this, if the shareholders all agree that this is a good idea, and this being whatever somebody has brought to the community, we can find a way to support it.
How do new shares come into it? How do Nubits come into existence? You were mentioning that a custodian is awarded Nubits based on, based on a vote. So how do those Nubits that they're awarded, how do they come into existence?
So the way that the protocol is set up is that it's all automated. When a vote is going on, the voters are putting in basically a key pair of a custodian's address and then the amount that they're requesting. And so as more and more blocks are minted and they contain both the pair of the address and the amount, when it reaches the tipping point of consensus, the protocol itself generates the requested Nubits and deposits them into that address. So it's a completely automated process. The clients can all agree that yes, the stipulation of more than 50% of the votes in a 10,000 block rolling window and more than 50% of the share days destroyed, for those votes matched up, and therefore it effectively acts as a transaction or a stake reward that is then deposited into the electric custodian's Nubits address. So that's the way that they're generated, and it doesn't require somebody on our side to go, this passed, so let me key something in and create them. And it's all based on cryptography and the system itself. So
it's all on blockchain consensus.
Absolutely.
It's quite a marvel. that's perfect. That's how these things are supposed to be. It's really cool that you guys have managed to, I guess, develop something so elegant and just complete in its implementation like that. It's awesome.
Well, thank you. I would love to say that I had a 100% hand in doing it, but no, I would have to defer to Jordan and Mike, who definitely are the the elegance and the genius comes from the two of them. So.
This episode's sponsor, Bit38wallets.com, brings quality, durable, encrypted paper wallets to the masses. They're my choice of cold storage solution, if that matters to anyone. They're flexible enough to fit in your legacy wallet. The range of designs available look great. There are numerous customization options, and given the low price of both the units themselves and international shipping, if you want a durable paper wallet, you can easily afford one. It's interesting. You've got these key players that really do have this intellectual capital in these platforms like Nu. Resides in these individuals with great vision and with the ability to execute these ideas. It's really amazing. It's awesome, and especially it must be cool that this community has rallied around these this small group of developers and architects.
I think part of it too that is really helpful, at least in the case of Nu, is that when Nu shares, when the concept was originally pitched, Jordan had received external funding. I don't know who that particular investor was, but the investment was basically to build this network. He had been convinced, or she, or they, or whoever had been convinced that what Jordan had envisioned was worth doing. And so, we'd received at the time, even before I was on it, basically about a $500,000 investment to build the system. So what that gave was the ability to do this in I'll call it a professional sense, where we could actually have people full-time working on it, without having to try to do an ICO or to try to solicit funds up front to build something. It really gave us a chance to build this, make sure it worked, and then release it. And so there was a lot less pressure of we didn't have some of the startup pains of trying to try to find funding so that next month we could actually pay people to work on this. So I think that combined with the team that has assembled, has really made it a joy to work on.
Now, we haven't covered yet how exactly the park rate vote goes, but I think I can probably imagine. Regardless, could you explain just in detail how the park rate vote operates and how that particular information enters into the blockchain and consensus is achieved?
Absolutely. I think that where we probably want to start with it is about parking in general and what the intent is. So one of the benefits of the new system is obviously that on blockchain we can grant new bits to inflate the supply to meet a given demand. I mean, that's important because if we didn't have enough supply, obviously people are going to start to raise up the price and push up the price. And so by having effectively an infinite supply, we can basically say, we need more new bits. There is a spike in demand. Let's put them out there. The contrary side of that, though, is that deflating the supply or locking down the supply, without a burn function, which the community is talking about, makes it difficult to rein in excessive supply. And so what the park rates allow us to do is to offer effectively an annual interest rate for a given duration of taking your new bits out of circulation. And so let's say that you have a bunch of new bits and there's an oversupply. The shareholders can begin to vote for different durations, as short as, I believe it's as short as one block, but for actual practical sense, it would be something like a day, to 2 to 3 years ahead of time, where you would put NuBits into a park, or basically you'd park your NuBits, and at the end you would be given back the NuBits that you had parked, along with whatever the accrued annual interest rate would work out to be. So the voting works in such a way that I, as a shareholder, let's say, would cast a vote for an annual interest rate of 1% for holding your NuBits for 1 month, because at this point we don't really need to have people holding their NuBits in, because we don't have an oversupply problem. But let's say that over time we start to see that maybe there are too many NuBits in circulation. Shareholders can begin to vote, raise it to 2% or to 3% or to 5%. It gives us some flexibility there, and like a lot of the great criticism over the last couple of months, as we've released, we have work to do in terms of being able to really make it so that things like NuBits could actually be completely destroyed through a concept of like a burn versus a park. But for the short term, it gives us a lot of power in being able to say, how we can maintain, we being the shareholders, or the general community, can really keep the environment and keep the network running smoothly without spikes both in supply and demand.
And so when this vote's going on, because that was the necessary preamble for actually discussing how the vote proceeds.
Yep. So I guess once the vote is in progress, and you're casting it just like you are a custodian vote or a motion vote, and so you're voting for a duration, you're voting for an annual interest rate on that duration. The client will then convert that annual interest rate into, the effective rate for the block itself, or the duration itself. And as blocks are minted, those votes are cast. What it takes is basically it looks at all of the votes that have come in, and it starts to give you some averages on where people are voting. And so it doesn't require consensus on a given value. I mean, it could be that 30% are voting for a 1% annual interest rate. The votes for the annual interest rate are going to be aggregated, and you're going to get to kind of a median point on it. And what that allows us to do is not lock the network into, oh, well, you voted for 1.99%, you were an outlier versus everyone else voting at 2.0, or maybe everybody is voting for something different, from 1.99 to 2.99, and so it is kind of self-fluctuating based on what people are voting and what the rates they're voting for.
And how is consensus achieved upon a single rate?
The details on that, let me make sure I'm clear on it. The way that it works is where a vote is done on a 10,000 block rolling window for things like custodian grants and motion votes. When the voting is done for park rates, because we need it to respond a lot quicker than basically a 1 week window, I need to make sure that my numbers are right, but if I recall correctly, it's looking at basically like a 24-hour window worth of votes. It's one of those things that I could have told you 30 seconds ago, and now it's not popping into my mind what the actual block count it needs to be, but it does allow fluctuation on like effectively a daily basis, as opposed to fluctuation on like a weekly basis.
It is quite a tricky thing to do, isn't it? Because you do need that feed, that constant voting from the shareholders to make sure that you've got this, to make sure that you've got the data to correctly set the the voting rate.
Absolutely.
The interest rate.
Yeah, part of the benefit that we have is that because the network at this point, we don't believe that it's saturated with too many new bits in existence. We have some time between when park rates really need to be something that is integral to the system. I mean, right now they're a nice to have, as opposed to if they didn't exist, the network would fall apart. And so, the plan is to develop the tools and develop the feeds and develop the systems that allow people to understand what's going on, within the system, within the network, to then make it so that it's as simple as possible to make sure that you're voting, in the way that best, suits you as a shareholder. So, it's we wish we could be there faster, but like everything, working on a financial product like this, we need to both leverage how quickly can we get a particular feature to market versus, what is the long-term impact on doing this, both for the security of the network as a whole, for the security of the individual shareholders, for the individual users of NuBits. So, I mean, we take the job of quality assurance as important as possible, because that's what makes us, good in the eyes of our shareholders and prospective users for NuBits, is making sure that we can continue to provide the high level of both the technology, but also that it works the way that it's expected to.
The other vote that's really important and interesting is the motion vote. Could you explain how that takes place?
Sure. So motion, and at this point, the best way to differentiate a motion from the custodian grants and the parking rates is that a motion vote is really a community sign of consensus as opposed to a protocol enforceable change. And so the benefit of a motion is that anyone could bring a motion, to ask or to request a vote on a motion, and it uses a RIPE-MD 160 hash, basically, of whatever the motion is. And what they're asking the community is to say, hey, we would like you, I'd like the community, or we'd like the community to vote on something like open sourcing the source code. And when we reach 50%, we would, it becomes kind of a gentleman's agreement to actually do that. But the system works because people will do whatever is requested, because if they don't, it devalues any other motion that is going to come in a later time. But the main point is basically a way to gauge consensus in the community of shareholders in a way that doesn't just involve them going to the forums and going, +1, I like that idea. It's a trackable piece of information in the blockchain that says X number of people voted for this over over that given 10,000 block rolling window, and more than 50% of the votes that came in said that they support whatever this particular motion would be. So, like I talked about before, some of the motions could be like a protocol change. The protocol itself can't invoke change because the code has to be written, but the community of shareholders can say, we would like you to implement a burn feature for NuBits. It's not there currently, but this gives us an idea as the development team, where the community should, wants us to go, what they want us to work on. Open sourcing the source code is another motion that when it reaches 50% consensus amongst the shareholders that yes, this is something that they want to do. We as a development team are, formally bound by our own ethical standards to do what they asked us to do. So it really gives the community a way to put forward their ideas, make sure that everyone is in agreement with or everyone being consensus in this case, is in agreement with the direction something's going in, and then allows us to take action to make it happen. So long term, I would love to see some automation done to motions where something could actually be triggered as a smart contract when that vote passes. Again, we're not quite there yet, but I expect at some point in the future we will be.
So there's this idea of a static social contract that you usually imagine in with these platforms, and by including this motion vote idea, you've effectively allowed for the social contract of new shares to be changed arbitrarily, but still according to consensus, which is a unique feature that is entering into these 2.0 platforms slowly. I don't really like the 2.0 analogy, especially with regards to something like new shares, which is not similar to some of what is traditionally considered second gen crypto. But yeah, that's a really key feature, I think, of these platforms, and something that I suppose we're going to be seeing more of going forward, or greater refinements of going forward through innovations like smart contracts, like you said.
Yeah, I think from a personal standpoint, when I look at the blockchain and what it is going to enable technology to do in the long term, one of the things that really appeals to me the most, and why I was really excited once I saw that Nu was going to at least attempt it, is the idea of distributed consensus, voting in things that are beyond just, we voted for the fact that all of these transactions were valid. If anything great comes out of Nu, beyond what we built so far, I would like it to be that people can take the idea of voting like this and extend it to, applications that we've never considered. Science fiction writers and futurists and political scientists have written for a long time about ways to build systems for community voting, be it on a local, national, state, national, or world level. But there have always been difficulties in being able to actually, implement something like that. And not to say that the new system is the one that will totally answer all of those challenges, but seeing that there is a system out there that is working, I hope gives people kind of a leg up to say, okay, well, we know that this works in this particular conditions. How can we extend it to work in other things? So, to me, it's really exciting. The idea of pairing this with a smart contracting scripting language, like I really am interested in what the Ethereum team is doing. I'm interested in what, a lot of these, as you said, the 2.0, BitShares has got some really interesting initiatives that I think are definitely worth keeping an eye on, both from a competitive marketing standpoint. But I don't really like to think about competing with these coins as much as we're trying to build a niche that we can support. But yeah, to me it's really exciting. This is the stuff that I hope that in the future my kids, when they get to go and vote for something, they're using something like a blockchain, because it is a lot harder to manipulate than our existing systems.
I'm glad you mentioned BitShares, because although it might be a little bit rude, that was my next question. Was I wanted to contrast Nu shares and the whole Nu platform, and what they're doing at BitShares, if you don't mind, because over there you've got this very fluid, or they're attempting to build a very fluid, unconstrained, free market approach to a value pegged token, and partly I think, and then we have Nubits on this side, which has quite a rigidly controlled value, with the approach you guys have taken. And if we look at the two approaches and we look at the two resulting tokens, you can see a massive difference in how closely the bit assets and Nubits follow their pegs.
I think so. I've done the digging into BitShares. I started following i3 when they had originally, what was the name of the original offering that they had? The mineable
ProtoShares, yeah.
ProtoShares. Apologize, that should have popped into my mind immediately. And I'd found that really intriguing, and reading the work, Bytemaster Dan's his work there, it really was interesting to me. I mean, I think my personal opinion on where they're going is they have a lot of good going for them. They have a huge community of people who are really interested in it. They do have a fragmentation, and they've been taking care of a lot of, I think, some of the fragmentation concerns. But, to me, we're trying to do one thing, and we're trying to do it as well as we can. I give them a lot of credit for building a very dynamic ecosystem.
I actually may not include that just because it might be a bit. It sounds a bit bad asking. It's ridiculous that there's this sense of competition in such an emerging market, in such an emerging space that there's room for more than one player. People treat it as zero sum,
Yeah.
But and you can't, the idea of competing for the slot of backbone of a new world economy, and anyone else can is in competition is completely ridiculous, and unbelievably audacious. But people do have that attitude, like you said, just because some things disagree with others' worldviews.
Yeah, I think I had a realization today as I was driving down the road. As I look over, and there's a large kind of tanker truck that apparently they were carrying CO2, presumably for like a beverage refill for, say, a bar to fill up their CO2 tanks. And it made me realize that, there's a niche for pretty much anything out there. I mean, somebody has figured out a way to make money tankering around, CO2 to fill up these tanks, probably on location. And so I think there's room for everybody out there. Nobody on the new team went into this by saying, we're going to knock off Bitcoin, or we're going to knock off Peercoin, or we're going to knock off any of the existing major coins or even minor coins out there. It was, we're trying to meet the need that we don't see being met, and if at the end of the day we are successful in that, then we've done what we set out to do. We need Bitcoin, to exist, because it helps. They're the behemoth in the room that spreads the message to everybody. I mean, my mom knows about Bitcoin before I even started working on this project, because she'd read about it, somewhere. And it's a lot harder for a team like ours to get that kind of market exposure right now, until we have enough people realizing that what we've built is able to maintain the peg. That they can, walk in and out of it right where they expect to be, and use it transactionally, like our long-term goal is to see it used as.
I have one major question that always needs to be addressed, and sometimes it's kind of difficult to, is
Sure.
What failure modes does new shares potentially face?
And in failure mode, you're looking for what are potential risks, to the network that are kind of self-imposed based on.
Yeah, what is not covered by what you guys have done? What it's funny. I was re-listening to an interview a while ago, and I used the phrase. I asked someone what black swan events might occur, which is, of course, it's a self-contradictory statement. Black swan events are, by definition, events that you couldn't possibly foresee. Do you see any potential areas of vulnerability to the new platform?
Sure. I mean, I think vulnerability is especially in the early days of the network, when liquidity is not as high as our long-term goal for it to be. There's going to be peg fluctuations if there's times of extreme demand or extreme sell pressure, buy pressure or sell pressure. The system itself is set up to address them, but as you accurately pointed out, if the shareholders aren't timely, responding in a timely fashion to it, interest rates may not be where they should be for parking, or a rogue custodian could hoodwink the community for a long enough period of time that they were a force for good, and basically break their social contract with the community once they've been granted the shares. I mean, those are certainly risk positions, but I believe they're risk positions in a lot of things. I mean, having new funds, I mean, because we deal in reserves, having things on exchange, if there's exchange default, those are also risks. But again, as the network continues to expand, as we get more exchanges on board, we can diffuse that risk, because if one side goes bad, we still have 16 sides that are good. The other points, a black swan event would be, because we're using the US dollar, and it's somewhat controversial, obviously, in the crypto space, that, the US dollar is inflationary and it's completely unregulated in the rate of inflation based on what the central banks and the Federal Reserve push out, and the banks themselves, what is created for things like issuing mortgages and general lending. If the US dollar were to have a catastrophic collapse, or to have adverse conditions, it's going to affect, obviously, new. We've been trying to develop systems that will help mitigate that. I mean, the way that new was developed allows us to build additional tokens. We have envisioned things like, you could have a new euro, you could have a new CNY, you could have a new basket of goods, and whatever that basket of goods, CPI based, or who knows what. We have a lot of flexibility there. These are all things that the system is built to be able to withstand. But certainly, if tomorrow, if hyperinflation set in, it would be a challenge for us. Jordan talks about in the white paper at the end, basically, what happens if USD becomes unstable, and you looking at the USD, for all of its the criticism you can level at it, it is the most stable fiat currency around right now. I mean, we have really no point of comparison to say that it's going to disappear or become obsolete at any point in the future. But we may have bigger problems at that point if the US dollar becomes obsolete, then what's going to happen to new. But again, that's my small, short-focused worldview.
Well, I mean, yeah, I mean, if we're talking about the collapse of the US dollar, it's we really go through a point where there's just there's no way we could know what's going on the other side of that little conundrum.
And we can the system is built, like I said, in a way to get off of that at some point. And I fully believe that some of the work on side chains that's going on in the crypto communities, these are things that could be adapted by motion vote or otherwise into the system to make it so that people could basically cash in their existing new bits for whatever inflation resistant token is available. We don't have the systems in place to support that today, but I fully imagine that the creativity of the community and the development team can find a solution to come up with in a timely manner to address these concerns.
Now, I have I noticed I've left two things unasked.
Sure.
One which is way out of I've left one thing that's way out of context now, but dividends.
Yes.
There are dividends, dividend returns that you guys will generate from selling minted new bits, and I was wondering if you could explain how those work. Sure.
So this is something that came in from the PeerShares core that we built, and the more I look at it, the more I realize that PeerShares, to an extent, was built to be the framework and the groundwork for what became new, in addition to being a viable standalone solution. But the way that the dividends work is all the clients allow, anyone that is running the new wallet basically to be able to offer a dividend. Now, I don't expect that random people on the internet are going to, log into their new wallet and offer Peercoins to the rest of the shareholders just arbitrarily. So this is typically going to be a custodian or, some other a special event. But basically, what the system allows to do is each new shares address doubles as a Peercoin address. It shares a hash scheme that creates it. But basically, what it allows you to do is to import in these addresses into your Peercoin or PeerUnity wallet. And when somebody issues a dividend, it uses the Peercoin blockchain to send out a proportionate amount of shares or a proportionate amount of Peercoins from the dividend to each of the addresses that you imported in based on what percentage of ownership that address had in the new network. So an example would be Kiara had issued a dividend, I think it was for like basically about 60,000 Nubits worth of Peercoin from sales of Nubits, and that went out to everybody who held new shares, at the time that she was able to customize the distribution timing on it. But basically, 3 days before the announcement was when she had said that anyone who holds shares 3 days before the announcement will be able to be granted this part of the dividend, and that it uses the shared, or not the shared blockchain, but uses the Peercoin blockchain to send out those Peercoins. So it's a very, in my opinion, an elegant way of being able to offer a dividend that really is, it's proportionate, it's immediate, and it's traceable in the blockchain.
Now I'm wondering, we've got 3 tokens involved. Is it not possible to issue dividend in Nubits?
Oh, we certainly could. The challenge of issuing dividends in Nubits is it becomes self-referential. So by having an external unit, and Peercoin is the one that we had originally selected because of the size of the blockchain. It wasn't hyperly inflated. It is a good store of value. Well, it seems to be. The pricing has fluctuated a bit, but by being able to use an external currency, it gives the network the ability to not have to kind of be self-referential and use itself, right? So if a dividend was issued in Nubits and Nubits were declining in value for some reason in the future, it's not a good incentive to continue to support the network as a new shares holder. By having an external token that has value, that is a separate blockchain, we believe that we leverage a synergy between them rather than try to kind of undermine one or the other.
And of course, New Shares represents another cutting edge platform that of a kind we haven't really seen before. It's really the next. I don't like this next generation idea, but it really is. We've now got we've had tokens representing things other than just stake in a network, and then we've had the idea of smart contracts. These are familiar things, but the idea of tokens with stable value is really new and incredibly powerful. Bitcoin will never achieve adoption by the consumer in its vanilla state. It's just not a marketable product. But with some of these other pegged currencies, who knows what we'll see? It's really exciting.
Well, I think interesting thing about the kind of the 2.0 moniker is you look at the web, and I worked at AOL at the time when we were going through the web 2.0 thing, and so everything was web 2.0 this, web 2.0 that, and everyone was competing on these web 2.0 features, which was really just Ajax, but nobody wanted to talk it sounded a lot better when it was the cloud and the web and all of this. But I think that we're at the phase where it's going to be a lot more about the way that the web evolved into Node.js, and Ruby had really come about, and really with Rails, the introduction of Rails, and those were all of these precursors that you could certainly say, oh well, these are Web 2.0, but I don't hear people calling them Web 2.0 anymore, right? Or even alluding to a Web 3.0. It's just the web. And so I think we're at that. People need to add a name to something because it's different, as you said, from the original vanilla state of Bitcoin. But my hope is that a year from now, we're not talking about, oh, well, there's the V3 platforms. It's really just crypto platforms in general, and what the value that they bring based on their feature sets, on their stability, on their security models, and really the ease of use. I mean, what you just touched on with it being difficult to engender adoption because it's difficult to understand. And I like to think that I'm technical enough person. I certainly can't talk to you about the underpinnings of cryptography, but trying to explain to somebody why they should trust using a cryptocurrency is very difficult right now because it's filled with loaded terms, and I think that those will go away over time, and we can get to the point that we can explain it as simply as, do you understand how your banking system works when you take a picture of your check on your iPhone and it goes into your checking account? And when they say, well, no, but I trust that it works, that's what we need to get to, so that we don't have to describe why cryptocurrency is important. We can just show them that it works.
I think you've summed it up quite perfectly right there. So I think that's everything that I wanted to cover and more. So
well, thank you.
Thank you. Thanks for taking the time. I mean, it's really great to be able to get acquainted with New. It's been sitting there for a long time on my to-do list, and you've been a really great guide, and I'm sure everyone listening to this interview is going to be really appreciative as well. So thanks for your time, Ben.
Well, thank you very much, Arthur. I think the only pitch I can give is that if anyone's interested in learning more or debating the merits of, the community at discuss.newbits.com is very open, very pragmatic, and definitely ready to hear things, both positive and negative. So please, I ask that people join us over there and just help us continue to build things.
What's the New Bits webpage?
Newbits.com, Nubits.com. So you can get your wallets there. We are continually updating the wallet and pushing new versions up there. You can learn about new through the white paper. There's FAQs, and coming up hopefully very soon there will be a lot more analytic type information. You'll be able to see parking rates. You'll be able to see kind of real-time status of liquidity. And then if the Block Explorer is at blockexplorer.new. So pretty simple to get to anything that we have there. We have developer docs that we're building out at docs.newbits.com. And lots of community stuff that you can link off from all of those.
Cool.
I guess if you want to buy Newbits right now, down at the bottom of the newbits.com, you can check out the links to all of our exchanges. So we've had great partnerships with CCDK and Better for a long time, and we've got some new ones that are coming on that we're very happy to have as well.
Thanks for listening, guys. Cesis provided the tunes. For the Let's Talk Bitcoin listeners, the magic word is please. All relevant links are in the notes. Reach me at beyondbitcoinshow@gmail.com.